Recently, Tim Cook, Apple's CEO, along with several top-tier executives, liquidated a significant portion of their Apple stock holdings, following a dip in the company's share value post its summer peak. As per the SEC documents scrutinized by Fortune, on October 3rd, Cook offloaded 240,569 shares, raking in an estimated $41.5 million. Yet this wasn't a straightforward sale. Additional SEC records show that earnings from an ensuing sale of approximately 270,000 shares were reserved for tax obligations, effectively covering the settlement costs. This move by Cook is his most substantial in the past 2 years, with the previous sale in August of 2021 garnering a whopping $335 million, as indicated by Bloomberg's assessments. However, Cook wasn't alone in the financial maneuver. SEC reported and reviewed by Fortune highlighted that Deirdre O'Brien, Apple's senior vice president of retail, also cashed in 65,536 shares that day, resulting in a neat sum of $11.3 million. Additionally, Catherine Adams, Apple's general counsel, parted with stocks amounting to $11.4 million in that same week of October. The decision to sell was set against the backdrop of Apple shares declining from their massive summer of 2023 and the zenith of $195 a share. Currently, share price is around $173, $174. Nonetheless, a minor dip in stock prices shouldn't overshadow Apple's commendable trajectory. Year to date, the share price has surged 39% and has been an astounding 210% growth over the last 5 years. Apple conveniently retains its position amongst the revered Magnificent Seven, a league of dominant tech titans that encompasses Alphabet, Amazon, Meta, Microsoft, Nvidia, and Tesla. But the big question is why is this happening? The recent stock sales by Cook, O'Brien, and Adams shouldn't be conflated with typical shareholder sales. These top-tier Apple executives are actually vesting components of their compensation packages, not just disposing of shares, a practice that's pretty standard among elite tech leaders. According to the SEC records, the trio is engaging in a mix of vesting, performance-based restricted stock units, stock awards, and other restricted units. This method of vesting is frequently utilized by companies to reward their senior team over and above their regular salaries. Closer look reveals that Cook is monetizing his performance-driven shares, especially after he voluntarily opted for and was granted a 40% salary reduction earlier this year. An SEC document from January highlighted that Cook willingly slashed his $35 million salary between 2022 and 2023. While his base pay remained steady at the $3 million mark, his equity award value dipped from $75 million down to $40 million. However, his annual cash incentive stayed firm at $6 million. This self-initiated pay modification by Cook was highlighted in the filing, especially after only 64% of shareholders greenlit executive compensation packages, a notable drop from the 95% approval of the preceding year. So let's talk about the Magnificent Seven. Tech giants' paychecks aren't always predictable, and you can see dramatic swings year after year. For instance, Amazon's head honcho, Andy Jassy, reportedly pocketed $1,298,723 in 2022, as it was detailed in the April proxy statement. This amount breaks down into $317,500 salary, with an additional $981,000 covering 401k contributions and added security expenses. Interestingly, Jassy's earnings reflect a stark 99% reduction from its preceding year's long-term incentive of $212 million in stock, set to vest over a decade. On the other hand, Satya Nadella, the chief at Microsoft, enjoyed a pay raise in 2022, cashing in a cool $54,936,310, up from $49,858,280 the year before. The spike can't be attributed to an enhanced stock award, yet his fundamental salary of $2.5 million remained consistent for 3 consecutive years. Mark Zuckerberg of Meta is a unique case, drawing a symbolic annual salary of just $1. Surprisingly, the company's 2023 proxy statement unveiled that Zuckerberg steered clear of Meta's bonus program too. The reason? The firm's compensation committee believes Zuckerberg's current stake in Meta adequately mirrors shareholders' interests. Still, His 2022 earnings reached a whopping $27 million, credited to his extensive security provisions. Sundar Pichai, the steering the ship at Alphabet, Google's parent company, has an especially rewarding 2022 in terms of stock. The Apple proxy statement showed Pichai with a stellar target award value of $210 million. Alphabet clarified that Pichai's stock rewards undergo a review every 3 years, emphasizing Sundar's most recent equity was granted in 2019 and it fully vested in December of 2022. Recognizing his commendable role as CEO, the Compensation Committee sanctioned a fresh equity reward for Sundar in December of 2022. If you want to stay up to date with business, financial news, please consider subscribing and hit the notification button, and also like this video. Thanks so much.